Good morning, good afternoon, and good evening, investors. Thank you for listening to the How to Invest in Austin Real Estate podcast. Here are 5 fresh headlines buzzing in the Austin real estate scene for this past week. One, Stratos Properties just unloaded a prime retail strip in North Austin for $57.5 million to a local investor group. Looks like a steal, with vacancy rates dipping under 10% up there. 2, that iconic downtown IHOP spot on Congress is hitting the foreclosure auction next week after defaulting on a $20 million loan. Investors are eyeing it for a mixed-use redo with office space above. 3, BH Management snagged a 350-unit apartment complex in Flug. Undisclosed sum, betting big on the suburbs spillover from Austin's tech boom rents. They're climbing 15% year over year. 4, distressed debt spiking in Central Texas office towers, with Place MKR flagging over $200 million in troubled loans ripe for acquisition. Savvy funds are swooping in for discounted buys before rates ease. 5, Austin's commercial vacancy hit nearly 20% this quarter per Terrydale Capital's outlook. But that's sparking fire sale opportunities in East Austin warehouses, perfect for industrial investors flipping to logistics hubs. All right, now let's dive a bit deeper into each of those 5 stories, as Austin's market is wild right now with all the tech money and rate shifts, so I'll keep it straightforward. First off, Stratos Properties retail sale. This one's a straight up win for opportunistic investors. Stratos, a big local developer, just closed on unloading the shops at Tech Ridge in North Austin, a 200,000 square foot open air center anchored by HEB and some quick serve spots for $57.5 million to a Dallas-based group called Cypress Real Estate Advisors. Why is it hot? Vacancies in that submarket are down to about 8%, and thanks to the area's exploding population from nearby Round Rock's growth. Buyers are banking on e-commerce resistant retail holding steady, with cap rates around 6%, making it a low-risk entry point for value add plays. Second, the downtown IHOP foreclosure. Talk about a classic distressed gem. That Congress Avenue location, a 15,000 square foot site with the iconic diner below and unused upper floors, defaulted on a $20 million construction loan from regional bank after our pandemic hits and rising insurance costs piled up. It's up for auction December 2nd through a Travis County trustee sale starting at $12 million. Investors are buzzing because it's zoned for mixed use. Think gut renovate into ground floor restaurant or retail, then convert the top 2 levels to boutique offices or short-term rentals. The location's unbeatable, just blocks from the Capitol. And with Austin's office rebound, it could flip for $30 million post-rehab. Third, BH Management's Pflugerville grab. BH, one of the nation's top multifamily operators, scooped up the Republic at Pecan Springs, a shiny new 350-unit garden-style complex built in 2023 for around $85 million, though they're tight-lipped on the exact figure. It's in Pflugerville, about 20 minutes northeast of downtown, where Austin's housing crunch is spilling over from tech expansions at Samsung and Tesla. Rents jumped 15% year over year to an average of $1,600 a month for a 1-bed, and occupancies at 95%. They're planning light upgrades like smart home tech to push premiums, betting on the suburbs' 20,000 new jobs forecast by 2027. This screams steady cash flow for long-haul investors. Fourth, the distressed debt wave per Place MKR. Place MKR, an Austin-focused advisory firm, dropped a report last week flagging over $200 million in non-performing loans across Central Texas office and industrial assets, up 30% from last quarter. It's fueled by refi woes, with rates hovering at 7%, hitting older Class B towers, hardest like those in Round Rock and Georgetown. Funds like Blackstone and local vultures are circling, snapping up notes at 70 cents on the dollar for foreclosure flips. The upside, with hybrid work normalizing, repositioning these for co-working or life sciences, could yield 20% IRRs once the dust settles. Expect more deals by spring if Fed cuts come through. Fifth, the commercial vacancy spike and warehouse fire sales. Terrydale Capital's Q4 outlook nailed it. Austin's overall office and retail vacancy crept to 19.8%, the highest since 2012, thanks to remote work and overbuilding. But that's catnip for bargain hunters, especially in East Austin's industrial pockets, where 300,000 square feet of old warehouses are listing at 40% below peak values. Take the Muller Airport redevelopment area. A 100,000 square foot brick behemoth just sold for $8 million to a logistics fund who'll convert it to last mile delivery space for Amazon partners. With industrial rents up 12% despite the glut, these distressed buys are gold for quick turn investors eyeing e-com growth through 2026. Thanks for listening to the How to Invest in Austin Real Estate podcast. Make sure to subscribe and leave us a 5-star review to stay on top of the latest news.